So this year we've seen a trend with mortgage rates going up. But what if we told you that we just saw the biggest decline in 1 week since 1981? We're going to get into it today. So Justin, how did this happen? What the heck? Because every single week we've been saying how much they've been going up.
Yeah, so basically in mid-November, the data came back that inflation went down further than they expected.
Mm-hmm.
So the market had good reaction with interest rates.
Yeah.
And they jumped down.
Uh-huh.
The biggest jump since 1981.
Dang.
So we're going to kind of cover what 6 pros think will happen next.
Mm-hmm.
And we'll kind of give you our opinion based on that.
All right. So first part of the article, for most of 2022, the trend of mortgage rates was generally up and then up some more. But in mid-November, something big happened. Thanks to better than expected inflation numbers, the average rate on a 30-year fixed mortgage rate dropped to 6.61 the week of November 17th, which was the biggest weekly decline in roughly 40 years. According to Freddie Mac's primary mortgage market survey, that's been a relief to borrowers for sure, but what happens next? We ask the pros.
Okay, so drop from 7s to 6.61. It was like
Yeah.
a 0.5%, and it was in 1 day.
Yeah.
It was awesome.
Huge. for
Big
sure.
deal. Got a lot of buyers off the fence that said, hey, let's go buy something. This is low
Mhm.
enough and affordable enough. So
Yeah.
prediction number 1, they suggest mortgage rates could rebound, right? They say after a steep and lengthy climb, mortgage rates recently retreated in reaction to data indicating that inflation may have peaked, but the Federal Reserve stated commitment to continue to fight inflation with rate hikes, likely included a rate increase at their December meeting, could send mortgage rates right back up again, says Katie Wood. So they're meeting on the 14th of December, and unfortunately, you guys are gonna have this video and that data is going to be out when you see it, and so we'll kind of see
Yeah.
what they say, but essentially we're expecting them to raise rates 0.5% to 0.25%,
Okay.
which I think will bump the market back up, but we also, depending what inflation numbers, might see the banks react a little bit differently.
Yes. All right, so prediction 2, data shows that the higher federal funds rate are starting to cool off. Inflation, and thanks to the rate-friendly inflation data, mortgage rates dropped back below 7%. If inflation continues to decelerate over the next several months, mortgage rates will likely stabilize below 7% for the remainder of the year, says Nadia Evangelou, and I hope I'm not butchering that, senior economist and director of real estate research at the National Association of Realtors.
And that is pretty likely, right?
Yeah, I think so.
Even with the Fed rate hike probably coming in December, they might bump up a little bit, but the banks and mortgages understand they need to do loans to be profitable.
Yeah,
they need to
yeah.
get people out there buying to make money. And if they don't, it's not good for banks and their business. So they might have to make a little less on their end. But you can see from the November drop that they are very much willing to do that to help make loans happen.
Absolutely. All right, so prediction 3, owing to better than expected
Whoa,
inflation.
you gotta read the headline.
Oh, sorry. Prediction 3, they could even fall, just don't expect rates to fall like they did in November.
So there's a chance it might
Yeah.
drop a little bit more
Yes.
based on the economic inflation data.
Yes.
Now go ahead.
All right, okay. Owing to better than expected inflation figures, the average 30-year fixed mortgage rate fell from 7.8 for the week ending in November 10th to 6.61 for the week ending the 17th. Though this is the largest week-over-week drop in decades and will make getting a mortgage more affordable, mortgage rates still remain considerably higher than they were in January. I don't think we should expect to see rates fall by nearly 50 basis points each week, says Jacob Channel,
No way.
senior economist at Lending Tree.
And then Jeff Tucker, senior Zillow economist, says after a very volatile autumn, 30-year mortgage rates are settling into their mid to upper 6 range. That's still about double their level at this time last year, but a little relief after peaking above 7% a few weeks ago. There's not much reason to expect rates will take an upward again, and in fact, if we keep seeing encouraging lower inflation indicators, there's a good chance of rates actually declining. To be conservative, I'd expect them to the low to mid 6 by year's end.
Ooh, that's kind of optimistic.
Yes.
Compared to what we were thinking 6 weeks ago.
Yes. So, guys, I understand, Zillow's got their agenda and what they want to do, but there is a chance that we could continue to see rates go down from the banks.
For
Not
sure.
from the Fed, but from the banks.
Yes.
Now, there's a couple key things for you guys to look for in the coming days. That's going to be number one, mortgage interest rates for December are expected to trend flat to slightly down, but are ultimately hinging on 3 key data points. So the first one is going to be November's employment report. If job growth slows, she says, the mortgage rates could come down slightly as the Fed may become more cautious of a faltering labor market. That's the one indicator that they've been waiting on to kind of see that the jobs reports have got to drop and more people have got to lose their jobs.
They've straight up said that.
For them to stop their rate hikes.
Yep. The second number to watch is November's Consumer Price Index data on December 13th, which will indicate if peak inflation is indeed behind us and progress is being made. I actually made a TikTok and quoted that December 13th, so that'll be really interesting to see. The last one that we saw, it had fallen slightly, so we'll see if the trend's going to continue.
Yep, and that's the third and final thing to look for on December 14th. That's when the Fed's going to make their decision. They expecting a slowdown rate hike to be 50 basis points to 75. I'm guessing 50.
50.
Yep,
okay.
That's what I've said even a month ago. That's what I said. So 50 basis points is what I think it's going to be. Quote me here, quote me now. And then the next rate hike will be a quarter, and then another quarter. Then after that, they will not raise them again. It will start to go, they'll stay that level for a little couple months, and then second half of 2023, we'll start to see rates from the Fed come down, which will reflect very well for the rest of us trying to buy a house.
You guys heard that here first, right? Okay, you guys, well, please make sure to drop a comment, reach out if you guys have any questions, and we'll talk to you guys later.